Imagine you wake up and suddenly every single thing in your house, your phone, your car, your kids' toys, even the coffee you're drinking just got a secret tax added to it. We are talking about the biggest tax hike in American history, and it isn't coming through the IRS, it is coming through the border. As we speak in mid-February 2026, President Trump's massive new tariff wall has officially hit a staggering $2 trillion in projected revenue over the next decade. While the White House calls it the most beautiful word in the dictionary, the rest of the world is calling it a financial nuclear bomb. The average American household is now paying an extra $1,300 every single year just to keep up with these prices. But here is the real kicker. This isn't just about making things more expensive. It is triggering a sell America panic that is actually crashing the value of the US dollar. We are going inside the numbers to show you how a policy meant to protect America is actually setting the global financial system on fire. Hello friends, welcome to Geo Unseen YouTube channel. Today we break down the $2 trillion tax and why Trump's new tariffs are crashing the dollar. For decades, the USA was the king of free trade. But in 2026, those days are officially dead and buried. The Trump administration has jacked up the average effective tariff rate to nearly 10%, the highest level the USA has seen since 1946. They have slapped a 10% baseline tax on almost everything coming into the country and pushed rates as high as 50% to 100% on imports from countries like Brazil and India. Trump's logic is that foreign countries will eat the cost to keep selling to Americans. But as of the 13th of February 2026, the data tells a completely different story. A bombshell report from the Tax Foundation released just days ago confirmed that these tariffs are the largest tax increase as a percentage of GDP since 1993. The federal government collected $264 billion in tariff revenues in 2025 alone. But that money isn't coming from China's pocket. It is coming from yours. Research from the Kiel Institute shows that 96% of this tariff burden is passed directly to US buyers. It is a massive, invisible drain on the American wallet that is wiping out all the benefits of the recent tax cuts. While the White House claims they are taming inflation, the reality on the street in cities like Detroit or Kolkata is that everyday goods are becoming a luxury. But the real chaos is happening in the currency markets. Usually, higher tariffs make a currency stronger because people need more of it to buy local goods. But in 2026, we are seeing the exact opposite. A currency paradox. The dollar is tumbling because global investors are terrified of the unintended consequences. Just last month, the dollar index took its sharpest one-day drop in years after Trump started pressuring the Federal Reserve to cut rates even as inflation stayed sticky at 2.4%. Investors are looking at the massive $4.7 trillion deficit and the erratic trade policies, and they are making a run for the exit. Safe haven currencies like the Swiss franc are soaring because nobody wants to be caught holding a dollar that is being used as a weapon of war. Even the Supreme Court is now involved, considering a request that could block many of these tariffs, creating a strategic vacuum where no one knows what the rules will be tomorrow. The very foundation of the dollar's power, the trust of the global market, is being tested like never before. Quick question for the crew. Do you think it is worth paying more for your daily goods if it means bringing manufacturing jobs back to America? Or is the inflation tax too much for your family to handle? Let me know in the comments because this debate is dividing the world right now in 2026. Now let us look at the spiral of escalation that the IMF is warning about. In early 2026, the world isn't just sitting back and taking these taxes. We are seeing a massive, coordinated counter-tariff war that is tearing the global economy apart. On the 13th of February 2026, Eurostat released a shocking report showing that EU exports to the United States have already dropped by over 12%. In response, EU leaders met in Belgium just days ago to finalize a blitzkrieg of their own. They're not just targeting American farmers anymore. They are moving to restructure their entire banking sector to lessen their reliance on the dollar. It is a total strategic redirection away from Washington. China is playing an even more dangerous game. While they agreed to a temporary truce back in 2025, that deal is officially falling apart in February 2026. Beijing has started redirecting its excess production toward Europe and Southeast Asia, flooding those markets with cheap goods because they are locked out of the USA. But here is the real weapon: rare earths. In the last few weeks, China has signaled that it might restart its export controls on the very minerals the USA needs for EV batteries and missile guidance systems. It is a game of financial chicken where the first one to blink loses everything. And let's talk about the safe haven myth. For 100 years, the US dollar was where you hid your money when the world got scary. But in 2026, the dollar is the thing making the world scary. Between the massive national debt and the constant threats of new tariffs, global investors are starting to question if the dollar is still a safe place to be. We are seeing a sell America trend where central banks are quietly diversifying into gold. In fact, gold prices are already pushing toward $5,000 per ounce in February 2026, and experts from JP Morgan are saying it could hit $6,000 before the year is over. Even the Swiss franc is approaching record levels against the dollar as investors scramble for a real exit. Quick question for the crew. If you were a billionaire investor, would you feel safe keeping your money in US dollars right now, or would you be looking for a plan B like gold or the Swiss franc? Drop a comment below because the smart money has already started moving. The secret is that these tariffs are like termites in the woodwork of global trade. You might not see the damage immediately, but by early 2026, the structure is starting to crumble. Almost 72% of trade professionals surveyed this month say tariff volatility is the biggest risk they face. Companies are no longer asking, how can we grow, but how can we survive the next tweet? The foundation of the globalized world is being dismantled brick by brick, and the 2026 landscape is looking more fragmented than ever. As we move into the final week of February 2026, the $2 trillion tax has officially become the defining feature of the global economy. On the 14th of February 2026, the US Treasury Department released a mid-month update that sent shockwaves through the financial world. They confirmed that despite the massive revenue from tariffs, the national deficit has surged to a record $4.7 trillion. Why? Because the cost of servicing the debt is now higher than the entire defense budget. The tariffs are bringing in billions, but the resulting currency chaos and higher interest rates are burning through trillions. The big beautiful bill is starting to look like a massive liability. The most terrifying part of this 2026 landscape is the death of the safe haven. For a century, when the world got scary, everyone ran to the US dollar. But in early 2026, the dollar is the thing making the world scary. On the 15th of February 2026, the dollar index, DXY, dipped below 96.5, its lowest point in 2 years. Investors are no longer betting on American growth. They are betting on American instability. The Supreme Court is currently deliberating on the Trade Emergency Act, and the rumors from Washington suggest they might rule that the president's tariff powers were overstepped. This has created a policy vacuum where billions of dollars in trade are frozen in limbo because nobody knows if the tariffs will even exist by next week. But while the dollar is sliding, gold is entering a new era. For the first time in human history, gold has not just hit a peak, it has become the primary global hedge against US policy. On the 15th of February 2026, gold is trading at $5,100 per ounce. This isn't just a number, it is a signal that the smart money has officially given up on the paper-based dollar system. Central banks from Russia to Saudi Arabia are no longer just diversifying, they are aggressively de-dollarizing their reserves to protect themselves from the next round of American sanctions and taxes. The final takeaway for the Geo Unseen crew is this: we are living through the end of the unipolar financial world. The $2 trillion tax is not just a policy, it is a reset. It is a world where America first means every other country has to pay a toll to enter the US market, and in response, they are building their own walls. Whether it is the India-US deal reshaping the energy map, or the EU preparing its anti-coercion weapons, the map of 2026 is a fragmented puzzle. If you want to stay ahead of this 2026 trade war and understand how these tariffs are affecting your wallet and your future, make sure you hit that like button. It helps us keep digging into the real numbers that the politicians don't want to talk about. We are watching the border and the markets, so you don't have to. For more mind-blowing breakdowns of the New World Order, subscribe Geo Unseen YouTube channel. We have a lot more secrets to share, and the 2026 landscape is just getting started. Thanks for watching and for being part of the Geo Unseen crew. Stay sharp, stay informed, and we will catch you in the next one. Peace from Geo Unseen.